Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So you can see euro is showing very nice performance, nothing to complain about. So actually everything goes with the things that we have discussed recently. So as you remember in the beginning of the yesterday session, we said that and explained why we think that euro hardly will try to make the new lows on intraday charts, but probably will keep going higher. So it was cross-market analysis with the Great British Pound, some other reasons, and you can see that actually even turmoil in France has not made any impact on the performance of the euro. Maybe this is a kind of the preparation for today payrolls, just because we already mentioned that ADP report was really poor, so it has shown the last of the approximately 40,000 jobs, and if payrolls at some degree will be in the same way, so probably it could make impact on market, just because it increases chances for the further rate cut, and in general it is dovish for a dollar position. And on the background of this, you can see that euro currency keep going higher. So currently I think that everybody currently could see the hand shortest pattern on euro currency. It's similar pattern we have on the dollar index. I could show even you this pattern. So this one, as we have here, in fact, this pattern is a big part of the bread and butter potential trade on the weekly chart. We already talked about this, but we will return back to this question next week. Currently, it is not as important. And on the 10-year bonds, you could see that although we do not have any significant downside action, and 2 sessions ago, we've got this reversal candle, and it's potentially bearish for the yields. So yields could keep going down, which is stands in a row with the weakness of the dollar, and correspondingly could support the upside retracement on dollar rivals, which is euro currency, Great British Pound, and so on. So that's why here on euro currency, everything goes with our plan. And for our time frame chart, you could see currently clearer shape of the hand and shoulders. If everything goes as it should, the target will be at least targets OP. It's around 107.25, 107.20. So that's the destination point that market could reach. Now let's return back to the question about the entry on this position. So we already talked a lot about the splitting of the position, explained why it makes sense and why the splitting position always brings better results. So if you somehow have taken position here based on our previous conversations, so that's great. So you could just move stop the break even and see what will happen. If you haven't taken it but you would like to buy, here's a very cool feature is forming. So first of all, with this upward action, market has achieved the condition that we have discussed recently. Market returned back in this area, right? So here already was some chance for position taking with this retracement. As we said, if market return right here in this range, try and take the position on some retracement. But currently, you could see that we could get another pattern, another chance to consider taking a long position, and that might be hand shoulders on the top. So that could become left shoulder, head. Right now, market could start forming the right shoulder. Because currently, as you can see, this upside action, market has completed ABCD XOP target that we considered recently, which is right around the neckline of the bigger pattern. By the way, if you're a scalp trader, you also could consider taking the short position around this area. I'm not currently speaking about the details because we usually do not consider very short-term stops. But just to say that these chances exist here. So we have the target, completion, and the neckline. So if hand shoulder starts forming as big hand shoulders, as small hand shoulders right here, so market could show this pullback out of it. But be aware of the payrolls report today. So it's just theoretical opportunity. Now, speaking about our general and major trading setup, if you would like to take the position, you, for example, could wait for retracement and forming of the right arm here. This will be around 105.30. This is 50% FIB support favorite for euro currency. So if the right arm will be relatively harmonic, the overall shape, that might be a great chance for possible position taken on euro currency. So that and towards what we have currently. By taking a look at the Great British Pound, here is also everything stands the same and really great. On the hourly chart, recall what we talked about, this failure of these hand shorts. That was the reason why we said that euro currency also will keep going higher. At this point, we said that this is the failure. Be prepared for upward continuation. That has happened. So euro has followed very soon. And if you take a look at the big pattern on the 4 time frame chart, you could see that while euro is general, it's just challenging neckline marking here. So almost stands in the moment of the breakout. Although, for truth's sake, you could see that the slope of the neckline here are different to euro. If euro has down slope, and Great British Pound has upper slope. And from that standpoint of view, the breakout hasn't happened yet as well. But in general, it stands slightly higher on the previous top compared to the euro currency. So as you could see, everything really goes nice with the plan that we have discussed and actually was following through this week. This is the final session for this week, so just thinking about the overall background, what patterns that we have, you could just decide whether you would like to or not to take the part in the trading process on the background with the payrolls report. If it's okay to you, so you could just consider these patterns that we have discussed and decide what your plan for position taking here. Another opportunity that we probably could consider. This is difficult to say at what chances this will happen, but suggesting that payrolls will be really bad, market could not form the hand shorts, so theoretically it could show as just direct upside breakout. And from that standpoint of view, one of the possible ways, as we already talked about this many times, it might be using stop buy order. So your order will be executed only when the market will touch it. So for instance, the market will collapse, your order will be unfilled. But if it will be a sudden upside breakout, unexpected breakout, and your order will be touched on the moment when the market will break through it, you will get the long position. So sometimes it might be useful in the current circumstances, like this one, because you do not know what will be, but you would like to buy, and this is just one option that theoretically you could think about. So it's now you need to prepare some strategy how you would like to be involved in actually the trading process and what particular orders you would like to place. So you could combine stop order, or you will be waiting for retracement to the 105.30, or you split your position in parts and just buying here because some uncertainty around payrolls exists. So maybe it will not be the hand shoulders here, it will be direct upside breakout. So there are some things to think about, but you still have a few hours to make the final decision.